Major surprise for the markets on Friday, August 5th. The non-farm payrolls, the employment numbers for the US, we saw a job increase or a payroll increase of 528,000 for the month of July. Far better than expected. The Dow Jones estimate was 258,000. This number is like almost double that. And also wage growth has come in higher, jumping 0.5% for the month and 5.2% from a year ago. And this number is actually, the unemployment rate that also came up with this data is now back to its pre-pandemic level and tied for the lowest since 1969. So what does this all mean for the stock markets? Because as you can see, there's a bit of a mixed reaction on the markets on Friday. And I think you have to recall what Fed President Jerome Powell said in his last press conference. Everyone is thinking that the Fed's going to pivot, that they're going to start cutting rates because of a recession. And what Powell said about a recession is think about what a recession is. It's a broad-based decline across many industries that's sustained more than a couple of months. This doesn't seem like that now. The real question is the labor market has been such a strong signal of economic strength that it makes you question the GDP data. So with today's jobs data, I guess you can say that Jerome Powell is correct in his assessment here about the labor market. And I believe now that the markets have to basically readjust because the majority of the market was thinking the Fed's going to pivot and start cutting interest rates because of a recession. But it looks like the recession is still not here, according to the Federal Reserve, because of this good labor market data. And I think the market has already been pricing in Fed rate cuts and quantitative easing. And why do I say that? This chart on the 10-year yield, we were breaking below. It looked like yields were going to head lower. But as you can see, we have a big pop on this non-farm payroll data because now the market is pricing in a 75 basis point rate hike come September. So still a large rate hike in September. And then from there, the Fed might remain hawkish because of the good data. And, we're not in a recession. What does this mean for the stock market? And I got to go back to that weekly chart because this is something that we've been hitting hard here on Equity Guru. And it is this 4,200, 420 level on the SPY. We broke below it back in April, which started this downtrend. And we are retesting that level again, and we're seeing some rejection. So as long as markets stay below this level, more downside can still come. In order to turn positive or turn into a perma bull, in my case, we need to see a weekly close above 4,200 here. And I think the market is now having this issue where they thought rates were going to head lower, but because of this labor data, there's a possibility, or a real possibility, I'll say, that rate hikes are heading much higher. All right, folks, happy trading.